Hello, everybody. Welcome to the Professional Insights Podcast, episode 38. Josh, what did you just do?
I was doing my drum roll, but my setup fell.
You're an idiot.
Remember, it's like Vegas right now, right? You can drink at any time of the day. Nobody knows what time it is. So.
No.
No day drinking here, right?
Beer?
Yeah, thank you very much for tuning in, everybody. Keep the questions coming. My name's Brandon Curry.
I'm Jeff Collins.
Josh Bond.
And Trevor Lindy.
I wanted to touch on the articles that I think have been obviously circulating the social media landscape, because I know a bunch of you guys have seen the articles and have shared my articles about the CERB payments and the government benefits in general. That right now, the governments are, the federal government specifically, is looking at just trying to get as much money out as possible, as quickly as possible. And what a lot of people aren't realizing is that you are verbalizing when you call that 1-800 number. They ask you a couple questions, and one of them is the agreement that this can be reviewed and you can be audited to see if you qualify, that they're just assuming that they're just accepting everybody. And you're going to owe this money back. If they deem that you did not qualify for this, they will, or that you chose not to work, that you quit your job on purpose, or you chose to be unemployed, you will owe that CERB money back.
Here's a question for you, Brandon, though. Like, to me, at first blush, that's a great thing, right? Like, I mean, don't take advantage of things. But then now, how much more of our tax dollars is going to be pumped into policing this? Now, whether it's right or wrong,
yeah. So, I mean, I agree with you and this is why I've this could be in maybe another episode, but why I believe income tested benefits don't work, and why in theory I support a universal basic income over social programs and over income tested benefits, because the fact of the matter is, A, people lie, B, people try to screw over the system. Cash is not traceable, so there's a lot of people that are on social programs that get paid under the table.
100%.
And D, 9 times out of 10, you spend more money chasing down money owed than you do that what was dished out anyway.
Yeah.
Classic example is out of the U.S., who some states and some counties that still have food stamps. And in order to get those food stamps from welfare, you have to pass a drug test or whatever the case may be. They spend more money on those drug tests for people that are on the welfare system than they actually kick off of the welfare system. It just doesn't make any sense. With CERB, it's a bit different. The protocols and the procedures are already in place. So CRA already exists. They already have the tools in place to figure out where were you working before, what were you making before, why all of a sudden did this happen, and by the way, your business didn't shut down, right? So this is going to be this will be easier to find out on CERB than in other income tested benefits, because you will quickly figure out it's everything. I mean, your employer has been filing your paychecks and remitting taxes to the government ever since January 1st. So they know that you were employed, or they know that you were on EI, or they know that you were unemployed. They know that you were disabled before, or disabled, like all of a sudden now you're disabled. So this will be a lot easier. I'm not saying it's going to be complicated or smooth sailing, but it can be a lot easier done than other income tested benefits.
Just the screening aspect has to, if they're going to screen a little bit more, right? There's got to be at least some resources.
It was all about them getting the money in people's hands as quick as they could, and they had it rolled out in like 3 days.
Yeah.
When they're going to do it that quick, you know there's going to be rollbacks without a doubt.
Yeah,
It's gonna get
and
ugly, I
so
think.
a lot of people need to understand that the first time you apply for CERB, the 2-week period leading up to the application, you cannot make more than, or you have the ability to make up to $1,000 in a 14 consecutive day period. Your subsequent CERB application for the following period, and we're in the, what are we in? We're in the May 10th is when the third period starts to June 6th. And we're recording this on May 7th, just for our listeners. You have to make no more than $1,000 in the entire month, in the entire 4-week period.
Now, is that gross or net, Brent?
That'd be net.
Okay.
That'd be net. Yeah. Yeah. So because they don't take into account taxes, like obviously you never earned that money. So yeah, this is net after taxes or any deductions. So and a good example that would be a daycare provider who has to pay for food and what have you. So they would, but again, you're going to have to prove that you made less than $1,000, and then you won't owe that money back. Another thing that people are not accounting for is they're not withholding tax at source. So you will have to owe tax on CERB after this. Now, to the average person, this won't be that much of an impact. But all of us have children on this here, and all of us remember when our wives, who are all half decent income earners, all went on EI or maternity leave, and then went on essentially the what's it called? Parental leave, right?
Yeah.
The tax bill that we all got the following year, because if you had your child halfway through a year, EI would carry over to the following calendar year, which is the following tax year, and then your wife goes back to work already at the higher income tax bracket. You actually owe the MTR on the EI, right? Like you're now at a higher average tax rate. So you get dinged with a surprised tax bill. At least we did, anyways, over at our it was
everybody, Brand, right? Like, because I mean, at the end of the day, they're only taxing you at the low base, right?
Well, they're not taxing. I mean, I'm not on CERB, but I'm being told that they're not taxing EI. They're only withholding 10%.
That's right.
So, and then they're like, it'll all figure itself out in the end. Okay, well, you'll figure it itself in the end. Well, yeah, when your wife is making good coin, well, now you're getting taxed at her average tax rate at the end. So,
well, be mindful too. You can also tell EI to take more taxes off, right? In those instances.
Right, but a lot. I mean,
most people don't.
Well, why would you? I mean, you're only making a max of $26,000 a year taxed. I mean, you're already, yeah. What is it?
Taking a huge hit if you're making over the
it's a
significant
hit. It's a significant hit. So,
So what would you say to put aside from those payments?
Well, you need to talk to a tax professional or a financial advisor and reach out and ask what they think the tax rate is going to be. So basically, hey, what was your average tax rate last year? Okay, well, you're off of work you worked essentially for January and February for sure. Let's assume it really got affected in March and April, and maybe you open up in the last of May. So you're really only off 1 quarter of the, 2, maybe 3 months of the year. So if you look at your monthly rate and you look at the tax rate, it's quite possible, depending on what tax bracket you're in, it might not affect it that much.
Well, and you got to reapply for CERB every month, I believe, too, right?
Yes, you do.
Yeah.
So just be careful.
Yeah. Well, bond is gone again.
You got to talk so often, or maybe it shuts you down, or.
No, that's what happens when you're up in the cottage at the Bobo.
Yeah.
So yeah,
rural internet, I guess. Eh? It's not just about CERB though. There's also wage subsidy, and there's also that $40,000 loan for small businesses that they get that all. If they pay it all back within a year, they get to have 10,000 forgiven too.
you have so C.R. Smith Financial, because we have all of our staff at home, fully paid, full benefits, working. We qualified for the $40,000 loan.
Because you have payroll, right?
It's because it's part of payroll. Yep. And that's part of the agreement. You have to keep everyone fully paid and fully employed. You actually have until December of 2021 to fully pay it back.
You get
And
10
yes,
grand unforgiven.
and 10 grand is forgivable.
Yeah.
We did that but we did not qualify for the 75% wage subsidy because our income did not drop 15% in March, because it's just how our system works, the way our pay system works with trailers and what have you.
Yeah,
So,
but with that decrease in all investments, didn't dip that much for you guys?
well,
I think that would have.
The answer is simply no. I mean, that's kind of a tee up there, Trevor. Thank you very much for kind of letting me to promote that. No, our average mutual fund pretty much was around 17 to 20% down on average.
Okay.
The markets fell 35 to 40%.
Yeah, but you just said it was only required to be 15% lost revenues
on the previous month's year.
Okay.
Or the 2 preceding months, January and February,
which are already slower months to begin with.
So, and then you have to remember, it's not just investments that we do.
We have the insurance as well.
And we all have the insurances.
Yeah.
So it just worked out that a 15%, it was just too close to call. And this kind of piggybacks off of our last conversation in the previous episode. We're not about to take advantage of a government subsidy that we don't.
Hey, bud.
Right?
Yeah.
Cottage life, hey, buddy. Cottage life.
The comments, the words, the statement floating around is free money, and it's not free money.
It's not free money.
Right.
What about the 10 grand?
Well, the 10 grand's a forgivable loan. I mean, like, that makes sense to me but again, it's not free. There's stipulations. You have to meet the stipulations in order to get it. You have to fully pay back the loan, and it is interest free, and you have to keep everyone employed. So if you're not,
it's only 5% interest after that too, which is pretty reasonable.
Right. Yeah, that's pretty for an unsecured loan. That's pretty reasonable.
That's damn good. We looked into it with our build company, but we didn't qualify because we don't have payroll.
Yes, that's right. You have to have a payroll.
Yeah, I mean,
so
but your business partner,
how is that not free money really? As long as you have the stipulations.
Yeah, you're probably losing money. You will have lost money at that point in time, even if you've opened up, right? So it is free money. You're getting 10 grand free, and you're getting, the other. Well, you're getting 40 grand, no interest for 2 years, and you're getting a free 10 grand.
If you pay back in
if you pay it back when it's due and payable, right?
December 2021.
Yeah. So here's my question: which company is going to be able to do that one? Probably cash-rich companies. The ones that are living check to check won't be able to do it. So that's free money for companies that can afford it. So they're liquid, they have good cash flow, they have whatever. They're going to do it 100% of the time because what they're looking at is it's free 10 grand. So I have a client who's a dog groomer. He could use it 100%. We've talked about her, Josh. I've talked to her a couple times about her and see if we could help her out. She'd love to be able to do it, but she's losing so much money, and this is why they're kicking the other forgiveness for the lease, the business leases and all that. She'd love to be able to get that 40 grand. She needs it more than the companies who are going to take advantage of that 10 grand that's forgivable. There's no way she can pay that back in 1 year after all the losses she's going to incur this year. No chance. So the people that $10,000 would affect and benefit more cannot use it. Won't get the 10 grand back. The people that are going to keep that 10 grand are cash-rich companies already. They have no problem paying back, and they're saying, "Oh, that's free 10 grand. That's a no-brainer. I'm going to do it."
Well, no, I mean,
Tell me I'm wrong. Tell me I'm wrong.
That's not okay. So you have to kind of expand on that. Why doesn't she qualify for the $40,000?
No, she
She won't
can.
be able to pay it back.
Okay.
She's
He's
got no
talking
chance
about
of paying that back in a year.
talking about the free 10 grand, but here, like
Yeah.
in my
The
mind,
forgivable 10 grand.
the forgivable 10 grand. So let's say, businesses and she can pay back as much as she can. Why not, like, this is what I'd be looking at. Why not look at, okay, do I have either access to a credit product already, maybe a line of credit that's already in place, or going and qualifying for a line of credit? Because if you, couple of things you got to look at. It's going to be 5% interest after that time if you don't pay it off.
Mhm.
Alternatively, what is the interest rate on your current credit product? Because maybe it makes sense to, let's say your credit product is 8% that you've been able to pay it off as much as you can, and then just borrow the money from your unsecured line of credit that maybe you have in place already to get that 10 grand and bite the bullet and pay, an extra 3% interest on your personal line of credit instead. Again, you can talk to an accountant about it, but it becomes a shareholder's repayable loan at that point. So it almost sounds like if you have access to credit, why not use that personal credit to pay it off if it means getting 10 grand
100%.
free?
Absolutely.
Yeah, but still, my contention with this is that there's gonna be a lot of companies out there that are gonna say this is a no-brainer. It's 10 grand for free. We can pay this back without even blinking next year.
Yeah,
And they're all gonna take that 10 grand.
but that's
They're
but
all
hold
gonna
on.
take
But you're
Who
missing
wouldn't?
but Jeff, you're missing the complete point though. The whole point is to keep those employees on the payroll at home working full time. So yes, so someone like C.R.
Here's a
Smith took
bonus for
advantage.
10 grand.
And so for doing that, for because we're still down, we don't qualify for any wage subsidy. We don't qualify for any rent subsidy because we don't meet those metrics.
Mhm.
Okay, but we're still keeping all of our employees home safe. We've had to outfit a couple of employees with expense accounts and also with their own laptop, which they wouldn't have normally have had in the office. They would have had a desktop. So there has been some significant expenses that we've had to outlay, but it was the right thing to do. Everyone's on full benefits, so they don't have to worry about getting sick or any of their prescriptions. All of that we're still forking over, and they're not on CERB. We could have very easily, which a lot of advisors did do, which are smaller operations than ours, not fired, but laid off all of their employees, all of their support staff. And they're all on CERB right now. So the reality is, if you've got a whole bunch of, if every advisor has one assistant and all those assistants have been laid off and they're all on CERB right now, that's far higher than $40,000 going to one business. So in essence, we're saving the government money because we're still paying CPP, we're still paying EI contributions, we're still paying the employment health tax, we're still paying WSIB, we're still paying all of that still, and we don't qualify for a single thing. So you're kind of missing the point on why that $40,000 is there. And on top of that, it only qualifies for certain businesses. Large corporations don't qualify for the $40,000 interest-free.
What is it? 1.5
you have to
ceiling?
qualify. I believe it's either 1 million or 1.5 million in payroll.
Yeah.
So
25,000 minimum.
If you exceed that, you don't qualify for the $40,000 interest-free loan.
So for a company like myself here, because I'm looking at it for self-serving purposes here, we're in a similar situation, but we don't have a payroll. We're a very small business who's been building. We've had our company probably cut by 60% production at least right now. Still have our guys still working. Qualify for zero.
But that's
Dan's company
Correct.
would qualify.
Dan's
Dan's
company
company
does, yeah.
qualifies to, because Simon and the other guy
Are on payroll.
are paid through Dan's company and not through Bridge and Corey. Bridge and Corey could be the one to qualify. Excuse me, not Bridge and Corey. What's it?
TSJ.
JLM.
TSJ.
Yeah, TSJ. Sorry.
Yeah. So basically, but that's also what you get for issuing dividends, right? Like you can't have your cake and eat it too. You can't turn around and pay yourself dividends throughout the year in order to take advantage of the dividend tax credit and also the lower tax implications, and being able to do that, and then turn around and go, well, I don't have a payroll, therefore I don't qualify for the 75% wage subsidy and the $40,000 loan. You can't have both. Mm-hmm. Just like how I can't turn around. There's a reason why I T4 my self-income. And I've tried to have this conversation with many people, but whether or not you listen to me, that's up to you. There's a reason why I T4 my self-income up to the CPP minimum. It's so that I still get the CPP. So I pay both CPP, both employer and employee contributions. Yes, I employ myself, or C.R. Smith employs me, right? It's the same company. So taking out a left hand, that's what I mean. That's right. So I pay the full 12%, and the EI, because you have to, because I'm T4'd. All right. And there's a reason why I do that. And anything above that, you dividend yourself out.
It gives you a RSP contribution too, right? Because I dividend for 10 years. And
right. So you can't turn around, and then you can't turn around and say to the people who dividend themselves out, I understand why you do it. It's part of a financial strategy that I put in place myself and for clients. But you can't then turn around and go, well, I don't get CPP contributions and I don't get RSP contributions. No, I know you don't, but you also get you also have the chance to do an IPP as well.
Yep, individual,
which is an individual pension plan off of your corp. Can't have your cake and eat it too.
I don't get any cake. I don't eat nothing.
No, I mean it's
clearly.
And by the sounds of our offline conversation, no pie either.
I'm more of a cake eater. Actually, I had pie last night.
All right.
All right.
Time to wrap this one up, I think.
All right. Thanks very much, everyone, for listening in. Hopefully you're entertained as much as we are. And I hope you guys are all staying safe and staying healthy. I'm Brandon Curry.
Josh Bond. Help us help you stay informed. Ciao.
Ciao.